How are we doing, friends? And welcome back to Continues to Tick. Here we are once again with the monthly dividend portfolio review, now for October of 2024. And this is the last full week of October. On Friday, I believe, will be in November. And it'll be Thanksgiving, then it'll be December, then it'll be Christmas, New Year's, and bam, 2025. It's crazy. This year's over. You blink and it will be over. I'm sure a lot of us are going to be very busy at this time of the year. But if this is your very first monthly dividend portfolio review, friends, welcome. In this type of review, I go a little bit more in depth than I typically do. I'll tell you guys how much I fund my portfolio and how often. I'll go a little bit more into my sector allocations and percentages. I'll show you some of my best and worst performers. We'll dive into that a little bit. I'll tell you my number of current holdings, my current dividend portfolio's yield, what is my current expense ratio, and some of my short and long-term plans for the portfolio, as well as how much my dividend portfolio currently pays me in dividends. And then towards the end of the video, friends, I'm going to be diving into my thoughts on, hyperinflation. This word hyperinflation has been getting thrown around for a bit. So here we are, friends. No longer at the six-figure mark for the portfolio, but that's okay. We're at $98,758.01. If it was the six-figure mark, the 100K mark, this would be a different video today. I figured, we did hit it. I took a screenshot. I shared it with you guys the moment that I hit it. It was really cool to see, $100,000 in portfolio size. And I want to just share that with you guys because that was a milestone. We did hit it. We didn't sustain it just because the markets took a little bit of a pullback, but I know we'll get back to it. And whenever we do, we'll talk about it more. And if you guys are new here, or just as a reminder, I did begin this portfolio in July of the year 2020, right after that pandemic, that market crash, that weird moment. And ever since then, I've been investing into this portfolio, funneling money every single week until lately, most recently, I guess I should say, I stopped. And I'll explain why. I'll remind you guys why, and then I'll tell you where I'm at with that going into a little bit later into this video. As far as the market pullback, here it is. I'll show you over the last month or so. It really has some really big inclines here, and it's not like I funded this thing anything more than usual. On October 7th, 2024, I was at 96K, and then October 18th, I was at 100K. And these are just the markets continuing to just balloon upwards. There might have been some news about the interest rates getting cut and, other things going on. But for the most part, it was just a really good month. And then most recently, a little bit of a pullback, which is expected. You can see here I did hit $100,216.81 at some point. And that was honestly really fun to hit. So let's switch back to the all-time. Let's continue to scroll down here. So friends, if you're curious at all, you want to see right at your own leisure what it is that I'm holding in this portfolio, you want to jump into my tech sector, for example, and you want to see the individual holdings that I have. I just don't have the time to go into it per sector in this video. It'd take too long, but check out the link in my description box. It's a free link. It's very easy to access. It's a link that M1 Finance allows people to share, and I share the link to my pie here, to this pie right here, and you can click on it, see what it is that I'm holding in each sector, just to get ideas or to compare if that's something you would like. It's there and available, so you could see it. But since we're here in the tech sector, I hold Nvidia, I hold Apple, I hold Visa, Oracle, IBM, and Cisco, and the best holding in my whole entire portfolio, I'll tell you, is Nvidia. Nvidia has just been going crazy. For now, I'm just holding it. I don't have any plans to sell. We'll see if it continues to be the golden child moving forward as time goes on. I know there's a big old AI wave right now, and for me, I kind of like riding it. I have no reason to sell. I mean, I'm a dividend investor. I'm in this thing for the long haul. Nvidia pays a small dividend now. Maybe the idea is that it'll grow into paying a larger dividend in the future as it continues to establish its cash, right? So with that said, friends, let's see. So we'll set it by best performing sectors for now. So as we saw, tech was my best performing sector at 461%. A lot of that has to do with Nvidia actually just going bananas. And we have financials following that at 128% gain, energy at 122% gain, industrials, ETF, index fund, consumer discretionary, and so on and so forth. And then my least best performer, my worst performing sector, is healthcare, down 4% in the red. And what I hold in here is Johnson & Johnson, which is actually in the green, about 14% all time in my portfolio. And Medtronic is kind of flatlined at minus 2.4%, which isn't too bad. And then I have Pfizer down 23%, which is pretty significant. For now I'm just keeping it. So I don't know if I'll swap it out for something else in the future. I keeping my eyes on it. Not everything's going to perform well in my portfolio, so maybe it'll have a turn at some point in time. We'll see. And if we go to holdings here, this is the best measurement for my portfolio when it comes to the gain or the percentage return. So you can see here a little sneak peek. I do hold 50 holdings in my portfolio. It used to be 51 earlier this year. I sold one of them, and that one was Walgreens, which I saw most recently is actually planning to close some stores. So it continues to try to rebalance its own self as a company and try to stabilize in this very evolving economy, which I'm glad I sold. It was paying a good dividend, but wasn't enough for me to keep it around. I was losing too much value despite getting the dividends from that holding. But 50 holdings at the moment. My cost basis overall is $71,805.97, and my value is 98, as you saw. This means my unrealized gain, it's overall a 37.53% return, which equates to $26,952, which honestly is pretty good. A lot of it, I will be honest as well, is from NVIDIA, but sometimes you do have that golden child holding. We all deserve to have one in our portfolios. I even at some point sold $2,000 worth about a little over a year ago to go to Greece. So this would even be larger. But I do hold 84 shares at an average price of $13 of NVIDIA. So that will do it. But here's a good measurement of my portfolio overall as it sits. It's a 37% return if you were curious. And let's just see, after NVIDIA, it looks like ExxonMobil is my next best performer at 144%. Oracle, which is interesting, a tech company, is up 140%. Aflac, interesting, 120% return. And, it kind of goes down from there. As far as my worst performers, it looks like I have a couple. I have UGI as my actual worst performer, followed by Pfizer, and then, Verizon at 14%. And then these are sub negative 10% holdings of Medtronic, Comcast, Sunoco, American Waterworks, ADM, AMT, O, and JM Smucker. So interesting. I do this about once a month. So, just when I dive into my portfolio once a month, this is when I also kind of take a look at it. Otherwise, I don't pay too much attention to this portfolio. And as far as just showing you some of my dividend activity, I do have some buys, even though I haven't been funding my portfolio, which I'll touch on here in a minute when I dive into my short and long-term plans. But I do have some buys here. That's pretty good. So it's almost as if I was funneling in some money, right? It's like I have the drip activated. If you don't know what that means, is every time I get a dividend payout, I'm taking those dividend payouts and dripping them right back into my portfolio. It's cool to see this machine this snowball effect take effect. So here we are into the data section of my dividend portfolio review. As you guys saw, I do have 50 holdings, and my current dividend yield is 2.887%, which is pretty good. It's almost 2.9%. As far as it goes for me and my comfort level, anything between 2.8, I would say, maybe even as low as 2.7 or 2.6 if I have to for certain durations, but anywhere from that low end to the high end of 3.4, maybe even 3.5-ish, anywhere in that range is my comfort level. But this is where I'm at for the moment. And as far as my expense ratio, 0.01%, which is very low. And just going back to the dividend yield, I would imagine if I sold a lot of those gains of NVIDIA and rebalanced it back into my portfolio, into higher dividend paying stocks, I would probably get more dividends back. So, for now, I'll just hold the way it is and just continue to monitor is my plan for that. And let's see, so how much do I fund my portfolio and how often? So like I said, at the very beginning, I funded $500 every single week. And this slowly started getting adjusted and changed as I went back to get my master's degree, which I paid out of pocket, and it started decreasing over time. For a good chunk of time though, I was holding the line of $100 every single week until most recently when I had to take that job promotion I've mentioned that in actuality was like a pay cut. But it's experience that I need to then leverage to get the highest paying job that I want. So right now I'm in that phase of taking this pay cut. And as I mentioned in my last video, I stopped funding, which is not something I'm very happy about, but sometimes you do have to make these adjustments. And, it finally caught up to me, that pay cut. And the pay cut was significant. It's almost $25,000 of a pay cut. And that's not a small amount. And for the time being, I'm investing a lot in therapy and trying to improve myself as an individual and my relationship. So a lot of out-of-pocket expenses are going into therapy, for example. With that and life happening, I've put my funding on pause last month, and it's still on pause for now. So it is the plan just to keep it on pause for now. I think eventually I'm going to just ramp it up slowly, maybe starting at $25 a week and just slowly ramping it back up. I did touch on that. What are my current short and long-term plans for the portfolio? So as far as the short-term plan, like I mentioned, it's still to keep the funding on pause for now. I'm just going to drip what's currently coming in as dividend payouts, which we saw there, which you'll see here in a minute how much that is. And eventually, maybe at the beginning of December, I would like to start investing again at $25 a week and just kind of playing with that, because $25 a week, for 52 weeks is $1,300 for the year. That plus what you're going to see that I actually get as dividend income for this portfolio, it'll be a decent amount. Like I said, it's not something like I want to hold for a long time, but it's a good place to start. I don't want to bite too much more than I can chew, especially with the pay cut finally catching up to me going into the holidays and kind of being capped in terms of my income. So, that is my short-term plan. My long-term plan, I'm still creating this dividend portfolio. My goal is to get it to be $1 million dividend portfolio by the time I retire, which would be at the age of 50. 50 will be the soonest I can retire with my pension, because I do work for the state government. So my pension, my dividend portfolio, and eventually as I become like a high earner in my career, because that's what I'm currently investing in right now is career development, is I'll make more money. I'll either use that money to invest more into my portfolio, or I want to dive into real estate and maybe get at least one vacation type rental property or so, and then have that also be part of my overall retirement plan. But at the age of 50, that's my goal, that's my marker. By that point in time, I should also retire with the same medical benefit that I have right now, after putting 25 years in of state service, which that on its own is worth a lot. So especially for an early retirement. And as far as how much my dividend portfolio currently pays me in dividends, well, let's see. So here we are, right, in terms of 2024, total income of $2,400. But the way I read this, I do the next 12 months. So just the projected amount of what my dividend portfolio is going to pay, which, as you can see here, is now $2,640.12. And it'll show you the projected months of which months I'll get more money and so on and so forth, which is actually pretty cool. So for those that are curious, this dividend portfolio currently is projected to generate $2,640.12 on an average monthly income. That's $220. So we reached the $220 mark each month. And so now let's dive just at the end of this video here into my thoughts on hyperinflation. So it's pretty crazy, right? Like everyone is thinking that the market, was going to crash, right? Everyone was thinking this. I thought this, and the interest rates were going to go up and just kind of choke the flame of this inflation, right? And kind of help things stabilize. Not without its pain, though, right? Of course. They held the line for a certain amount of time with a higher interest rate, which I guess per history hasn't even been as high as it has been over time. And now they most recently decreased it, right? And now they're planning to decrease the interest rates again, which gives me this concern and has been given the concern of hyperinflation now happening. When interest rates go up, things go down. And then when interest rates went up most recently, things didn't go down. It almost seemed like they didn't hold the line of higher interest rates because of the pain that people are in. And honestly, a lot of political things going on in this capitalistic society, which I don't want to dive into, because now they're cutting interest rates. The expectation is, I should say, that things are going to increase even more again. And when I think of this hamster wheel, that we just continue to try to keep up with this inflation that continues to be a problem. It's like we're feeling the pain of this inflationary state, and then nothing is really being done about it. We're just working more to keep up with this inflation, to continue the same lifestyle. And it's just this machine. It's all under this umbrella of capitalism. Like, it's just, you can't feed this capitalistic machine enough. There's always an expectation for companies to make more profits, and for people to buy more, for consumers to feed their part of this machine and consumerism. And it's just this machine that just continues to move and move. And it almost feels like a lot of things are being done in this life to continue to feed this capitalistic machine, this hamster wheel. You know, you go to work, if one job's not enough, well, then you get your second job. And if you know, your one job and your side hustle isn't enough, maybe your partner needs her first job. And if that's not enough, then your partner now needs her second job as well, or their second job as well. And now you have 4 jobs to keep up with the same income, right? To keep up your same lifestyle, or to go take vacations. Like, it's just this continual hamster wheel. And I don't know if I'm doing a good job at explaining this thought process. It's a little early in the morning, so I do apologize if it sounds like it's rambling. But when I think of hyperinflation, I think of this outcome that was almost meant to happen because of capitalism and this capitalistic machine that you can never feed enough. You know, and there's parts of this that, you know, there's like greed mixed in there, and you just can never get enough. There's just never enough money going into this machine. So it's always going to feel like this hamster wheel that you can never hop out of, because to completely stop on this hamster wheel, you'll likely end up homeless. To give up on this hamster wheel, you're going to lose your lifestyle and have to go to a lower level lifestyle. So the hamster wheel is, you got to continue to grind, get your money, and if your one job isn't enough, you get your second job. Crazy, because that's the solution, right? The solution right now for people to keep up with this hyperinflation or this inflationary state is what I call the only answer, which is you got to make more money. If you don't try to make more money, you're not going to be able to keep up with this capitalistic machine. You're going to fall off this hamster wheel. And it's quite scary, right? Like I would always joke around with my partner, maybe beginning like a year and a half ago, you know, the only thing we could do is just make more money, you know, with this inflationary state. And it really looks like with hyperinflation, that's really the only thing you could do, because the wages aren't keeping up with inflation. You got to continue to find ways to make more money. My example is investing in career development. Having gone back to school to get my master's degree will help me get a job with a higher paying income because it's at a higher level, right? It's a higher level paying position. So that was my sort of roundabout way to, like, my solution to find a job that will pay me more, right? Investing in career development. And for some people, it's working their same job that has no more career advancement, but then getting a side hustle, and then maybe having a dual income, home producing income, with both people getting a side gig, right? Now that is a solution to get more money, right? Like, that is the only solution right now with hyperinflation, is to just make more money. And I hate saying that, I hate seeing it, but I don't see any other way. You know, with this idea of hyperinflation around the corner and interest rates going down, like, that is the answer. You just have to find a way to make more money. And then my last point here that I want to say is this feeling of being gaslit, right? It's like this idea that when you see the federal government putting out these statements, they're saying that the economy is actually very strong. The job reports are actually quite strong as well. That the inflation isn't as high as what we feel it is on the ground, when in actuality, we're not making enough money. People are losing their jobs. Things are more expensive. Our reality doesn't match the statements, the reality of the statements coming out. It almost seems like people are telling us not to feel the way we're supposed to be feeling based on our own reality of what's going on. It's just this crazy gaslit environment right now. And it has been for like the last year, probably 2 years. And the end result is what's being tossed around is this idea of hyperinflation. Like the government had to choose either deflation or hyperinflation, and it seems like they chose hyperinflation because deflation would cause even more pain, and it'd probably honestly have a huge break in this capitalistic machine that has to continue to get more profits and more money and more greed. And you know, they didn't go that route. Instead, they're just going to play and prolong this game of hyperinflation and see who's going to continue to keep swimming, who's going to continue to run on this hamster wheel and continue to play the game of trying to find ways to make more money to keep up with their lifestyle. So we'll see. We will see. But those are just some general thoughts that I had on this idea of hyperinflation being thrown around. And I would agree. I feel like, you know, we are heading towards hyperinflation. And I don't know what is going to help fix it, what's going to help stop it, other than just continuing to play the game and As long as you're in the markets is what I'm saying, as long as you're playing the game of investing and trying to get assets, like you're going to be in this game longer. Like you're going to be able to keep up. But if you don't have any assets, if you're not playing this game, you're just going to be left behind. So what's an asset? You're a dividend investor. Your portfolio is an asset. I'll end it with that. So friends, that's going to be it for this week's video. Hopefully on the next one, we'll hit the 100K mark and I'll be able to show it to you guys. We'll be able to have some fun with that video. Maybe show you a little bit of the journey of it unfolding over time. But as always, I will see you guys on the next one.